Evolution AB Q4 report. Evolution reported fairly soft numbers for the quarter. Material headwinds in Europe meant that revenues was down 3.7% and EBITDA were down 14%. Underlying revenue growth was close to 5%, but currency headwinds had a significant impact. I find the underlying growth to be pretty solid, especially when factoring in the problems they face. Breaking down the numbers a bit, the very important Asian market returned to growth quarter over quarter, a very welcome sign. Latin America and North America saw solid growth. However, Europe saw a big decline, which came as a surprise. Management didn't really have solid answers for the reason behind the weakness. This means that forecasting growth for the region is quite difficult in the short term. On a positive note, Evolution remained the margins within the guided range. This is important for the long-term thesis, as a common bear case is that anyone can make similar gains to Evolution. A strong margin, which is within management's control, is important to signal the competitive advantage that Evolution holds. What I mean by this is that if Evolution guides for lower margin due to investments in North America, for example, this might not signal a weakening competitive position. This is because the region structurally has lower margins due to personnel costs and a lack of scalability due to state-by-state legislation and regulation. Okay, so what about the bigger picture? As I have indicated in the past, I believe a low valuation for Evolution in the next few years can be utilized as a positive for the company if they buy back shares aggressively when cheap. The company has done this to some extent. With the share price continuing to decline, I would want to see an increase in buybacks. If the company will consider paying less of a dividend and allocating more towards buybacks, it would be a very positive sign in my opinion. The company didn't give any color towards capital allocation in the report, but will come back within the next few weeks. This will be very interesting to follow, and I very much hope for increased buybacks with the share price at these levels. Evolution is trying to establish themselves as a trusted partner for legislators. This is a calculated bet, but it incurs short-term pain, especially in Europe. If this works out, the competitive barriers towards competitors will be widened significantly. This will over time, in my opinion, lead to an increase in valuation for the company. However, this is over a long time frame and might take years to pan out. In the meantime, dividends and buybacks will have to do. In order to take full advantage of the low valuation in the meantime, they must buy back shares. Evolution now trades at a share price of around 560 SEK. The market cap is around 110 billion Swedish kroner. They traded at an enterprise value to free cash flow of around 10 times. Thus, the free cash flow yield approaches 10%. This means that you can get a decent return at these levels without any growth. Taking a negative view, you can state that the company has in fact stopped growing. The low valuation is warranted due to no growth and regulatory pressures. This is a fair criticism, but it fails to take the longer-term view. In the last few years, Evolution has had a lot of different headwinds, but the underlying market growth, the increase in regulatory markets, and Evolution's competitive positions is stable and growing. The long-term growth rate for Evolution should be at least in line with the market. Offline gambling is moving online. More and more countries are opening up for online gambling. I believe Evolution's position in the value chain is very profitable. This is the long-term story. Short-term, they face problems in Europe and in Asia. Therefore, growth could be flat for more quarters to come. That's why shrewd capital allocation from management is important in order to create shareholder value. I still believe the long-term prospects for Evolution are positive. The margins, cash conversion, returns on capital, and the competitive position remain strong. The underlying market growth is between 5 to 10%, and the market prices in little to no growth for Evolution. More and more people are being shaken out of the stock, and negative views on the company are more common than positive ones. The fact remains that when buying a company, you buy the future cash flows of that company. Over the long term, I believe that the future cash flows will increase. However, the recent problems means that short-term forecasting is near impossible. I don't even think managements are able to forecast short-term growth in a meaningful way. The thing is though, that you don't need to believe in any growth in order to justify today's valuation. If the company pays out all cash flows as a dividend, then the shareholder yield will be close to 10%. Personally, I want to see all cash flows deployed towards buybacks, as I believe the company will start growing again in the future. Full disclaimer, I own shares in the company, and has increased the position in the last few months. This is not financial advice. Thanks for listening.